Hey there, my name is John Stevenson, and welcome to the Guaranteed Retirement Guy Show. Today, let's talk about if you even need an annuity if you are a multi-millionaire. Maybe you have 5 to 10 million, 20 million or more, and you're thinking, I don't need an annuity. I got plenty of income coming in. And maybe you don't. Maybe you have investments that are paying you 5 to 10% in interest. I mean, you might have dividends that are paying you. You have munis. I had met with a guy a couple months ago. He had 10 million in munis. Okay. Maybe you have investments that are just earning enough interest. You're like, I've got plenty of income. I do not need an annuity because of that. Well, I'm going to kind of argue that because I do have lots of people who have lots of money who still choose to buy these contracts. Okay, there are reasons for the wealthy to purchase and to invest into annuities. Now, there are many advisors that would argue against this and they say, well, it's a terrible investment. You know, you're not making any money or you're making very low returns and you can make a lot more in this mutual fund or this ETF or whatever. Yes, you can. Okay. Yes, you can. But there are more than just growth reasons to buy these. Okay. There are strategic reasons to use them. Okay. And especially if you're married, that can also be very, very helpful if you have a very large estate and you don't want your beneficiaries to have to deal with trying to liquidate that estate or try to figure out how you were generating income. It's nice to be able to have an annuity contract for that. And you've got people like Shaquille O'Neal. Okay, he's worth what, $500 million? Yeah, he spent millions in annuities. Okay, you got people that are very good at business that still saw these as viable as part of their strategy for income. Okay, and they can be very, very useful, especially if you're looking to hide assets, because if you have like a DIA or a SPIA, a single premium immediate annuity, people sometimes will buy those because the insurance company keeps the money and you no longer have access to that capital. The income there is guaranteed though. That never stops. So that's what's nice about that. And they can hide those assets. People can't get to that asset, but the income's always there. So that's nice. So, but that's not the sole reason that people buy these when they're wealthy. Okay. They buy them for a lot of different reasons. And I'm going to share my screen, kind of go through some scenarios with you and show you how this might work for you. Even if you have plenty of income coming in, this still might be a viable strategy. Okay? And I'm going to look at growth options as well. So if you want some of your portfolio protected from risk and you want some growth still, there are some great opportunities for that. And I work with lots and lots of multimillionaires that will put millions and millions of dollars into these contracts for that reason. Okay. So let's take a look. So I've got someone here, Pennsylvania, and I'm putting $2.5 million into this annuity. Okay. They don't need the income, but they want it for certain reasons. So he's married, and I'm just going to say he's married to a female who is also the same age. Okay, just make it simple. Okay, and they want joint income. And he's like, hey, John, I've got $10 million, and I want to make sure my wife is taken care of, and I don't want her to have to go in here and try to figure out how to generate income off of all of my many assets. I want her just to be able to have this check coming in each month, no matter what. Okay. So right now it'll give a joint income of $166,000. Symetra, Prudential are on the top. Okay. You see all the other options. You got Corebridge, Nationwide, Nassau, Meritage. I mean, there's a lot of options here. Okay. But he might be thinking, we don't need the income right now, John. Okay, I want her to be able to have this. This can be useful later on. Or maybe we want to start gifting money to our heirs while we're alive, but we want to do it through an annuity contract, not by depleting our, I don't want to keep selling assets and trying to figure out which stock to sell or what to liquidate to help out my child with this. It's nice to be able to have something that would just kind of generate the income for that need or for that desire to help someone. Okay. So, but I don't need it right now, maybe in a couple years. Okay. Okay, great. So I'll just say 62, we'll turn this on. And of course, since the insurance company had it for a couple of years, it's going to be more income. So now you're at 200 grand, but maybe you still want to wait to maybe 64. Okay. I'll just stop it there. Let's just see what that looks like. All right. So now you're looking at what? 234,000. This is with Global Atlantic, and I'll illustrate this for you so you see what it looks like. So they're giving you $134,000 a year in income. They're basing off of $2.5 million. They're taking $3.5 million as a benefit base and multiplying it by 6.71, and that gives you contractual guaranteed joint income forever. That's your life and your spouse's life. So if you die, she continues to get the income regardless of this account value. So they're showing you this also with no growth. Okay, it will get some growth. They're giving you some of the S&P 500, but not much. They're just capping you what you get. So if you look at the growth projections, then the account balance will probably last to your 77. And again, this you did it for income. Okay, so you bought a $7.5 million pension. That's what you did. You basically made life simple, and you're saying, all right, we're roughly getting $20,000 almost per month, guaranteed for the rest of our lives. And if I die, my wife can continue to pay our bills and live a decent lifestyle without feeling pressured to sell, any of our investments or try to figure out create an income from it, at least right now. So it gives her time to grieve and to also, look at the other assets and say, all right, well, here's what I want to do. Maybe I want to do this. Maybe I want to buy another annuity with some of this, or maybe I want to put this into this fund or whatever. It's nice to be able to be in a position where they don't feel like they have to do something right then. Okay. There's value in that. It's not all about just here's how much I can get in percentages and dollars, and here's how I can grow this wealth. Yes, that's important, but at the same time, it's nice to be able to actually use some of it. Okay. And I have some people that'll put more than this. Okay. This might not be a big number to you. You might be thinking, well, okay, that's fine. But that's not enough income. Okay. I want more than this. Some people have a lot more than this. Okay. I met with a doctor last year. He had like 15 million, and even 30% of this, of his net worth, $5 million, would give him decent income. So, and if he let's just see what it looked like if he did immediate. All right. So immediate 332. Pretty good. And if he was like, well, I'm still working, I'm probably going to work until I'm 65, but I still want to throw this in here, protect it from the market risk and get some growth, then great. Then I'm going to get $500,000 a year, which is good. So I've got my base, and I'm getting $40,000 a month. That's pretty good. Now he's still got his other $10 million. Maybe he's got half of that in the market and half of that in cash or cash equivalents. That's fine. That half of that $5 million in 7 years will be worth another $10 million if he leaves in the S&P. As long as the S&P does what it's done in the last 100 years, that's pretty good. Okay. In 14 years, he'll be back where he was. That'll be $15 million from just $5 million. He's still got the $5 million cash, and he's still got this paying him $500,000. So this is a great way to strategically give yourself income, give your family income, and at the same time be able to grow your other assets, grow your wealth if you want to. And I would recommend just think about what your wealth is for. If it's just to leave behind a gigantic chunk of change for your family at the end, then fine. But your family might be older. They might be more established. They might not need it as much. It's still a nice bonus for sure. Don't get me wrong. But they might need it a lot more now versus later. And so this allows you to really enjoy giving it away now and helping them now when they need it the most. Or even just spending it. If you don't have family, be able to spend it and enjoy it. I mean, if you were thinking, hey, I've got $15 million and I want to enjoy my income without having to sit here and generate it. I just want passive income. I don't want to deal with real estate. I don't want to deal with these investments. I just want income. I want contractual guarantees. You can do that too. Out of 15 million, you take $10 million out and you got $1 million a year coming in every year. You see Nationwide right here. So Nationwide, there you go. There's your $1 million. Okay. And then with growth, it'll last till you're 77, 78. The account balance. The income, it just keeps going. Okay. If you live to 95, you're taking out $32 million. Okay. You're maximizing the use of your money. Okay. No one in their right mind, depending on the type of investment, typically will not take a 10% withdrawal rate, right? But this, you're like, yeah, I'm going to take basically 10% of my 10 million and I'm going to take it out and I'm going to enjoy it. Right? And it's going to be for life. No, typically you do a lot less than that. So, but this, just to be fair, your benefit base grows to $17.5 million over 5 years. And they're multiplying that by a 6% withdrawal rate. So that's guaranteed. That's contractual. That is not the highest growth strategy. Okay. If you're looking to grow and maximize your wealth, this will not do it. But this is a way to disperse your wealth to yourself, enjoy it while you're alive and you're young, and be able to use it also for the benefit of your family and those around you. So that's just kind of what I wanted just to talk about here is some people feel like, oh, I've got all this money and I really don't need an annuity contract. And you probably don't. But there are ways to be able to kind of take things off your plate and ways to take things off of your loved one's plate where they could just have the income, they have the revenue, and they don't have to worry about it. And this allows you to convert some of your wealth to enjoyment, convert it to be able to actually really maximize your lifestyle if you want to. If you want to take some really big trips, you want to take your family on big trips, you want to buy a new car every year and be able to just not have to liquidate your accounts to do it, just have something that just hits your account each month, it's nice to do that. All right, so I'm not going to talk about just income here. I want to talk real quick about growth, okay? You might not need the income at all, but you want it to grow and you want market protection, okay? I'll show you a MYGA. Let's look at the fixed rate, okay? And let's see, $10 million. All right, let's just say with that, we want to go with A+, okay? All right, and with these, I'll tell you have to spread it out. You're not going to be able to put it all with one company. So Reliance Standard, good one. North American, Protected, they're all good. So you might spread it out and say, okay, see, the rate you're getting is like 5% on average with all these, okay? So I'll just pick one of these and I'll show you, here's what you can expect. Yeah, so earnings, 500 grand. Grows to 4 million in earnings. You got 1.4 million at the end of that. It's not being in the stock market, but it's not meant to. You're just getting a high rate of growth, a place to park your money, and then put your wealth somewhere else. That's super nice. Okay. It's really nice. So let me show you one more thing. Performance Analyzer gives me access to all the indexes, and I'm going to show you. Let's see. Out of the 4,000, well, on this page there's 1,000. So we're basing off of the premium. Let's do $1 million. All right, so $1 million, I'm going to show Lincoln. They're one of my favorites when it comes to growth. Okay, so we got $1 million, and the reason why I'm saying Lincoln is because they're one of the best when it comes to the S&P 500. They give you 55% of it, and they keep their participation rates pretty constant year after year. So that's really important when I'm selling these, because I want you to be able to have the illustration that I'm showing you. I want you to experience that illustration, not just get sold something and not get the growth. Okay, now we've got $1 million in there. So $1 million, if there's zero growth, it just stays where it is. Although the cash value does grow, so I guess they do give you something for leaving it there. But if you just want market protection and growth, it still grows. I mean, in 10 years, it's worth like $2.3 million. Okay, you can get some of the index right here. There are years where the market goes down, you're not losing anything because they're buying call options with these indexes. If you let it sit and grow, it'll grow to like $19 million if, over 35 years. Definitely do better in the stock market. But this just protects a portion of your portfolio from that risk, gives you peace of mind, gives you the protection, gives you growth at the same time. And if you want to take withdrawals from this, you can do that too. So anyways, this video is just meant to be informative, give you your options. And of course, I sell annuities. That's how I make money. But at the same time, I show everything that's available. And commissions of these products are all over the place. In my opinion, you should be shown everything that's available, and then you choose what's best for you, not what's best for me. So that's why I tell people before they book a call with me, go to my website, check my calculators on johnstevenson.com. Look to see what's available. You won't see the index options. There's too many to list. But you'll see the MYGAs. You'll see the income rider. If you want the highest income, you'll see that as well. So this is very, very effective. When people have lots of money, they will still use these contracts. Okay, you just have to decide what you're looking for and kind of what the end goal is with your money. So I hope this helps. I appreciate you watching. Again, if you want to book a call with me, there's a link below this video, and there's a link on my website, johnstevenson.com. And of course, I'd love to help you buy an annuity if that's what you're looking for. Otherwise, enjoy the video, enjoy the channel, check out my other videos. Make sure you like, subscribe, share if you like it, and any questions, comment below. Otherwise, we'll see you next time.